Hello and welcome to this episode of Capital Call, a special podcast series on the COVID-19 pandemic and the advice investors have for startups in the ecosystem to tide over this difficult phase. I'm your host Payal, and today I have with me Anuj Golecha, co-founder of integrated incubator model Venture Catalysts. Welcome to the show, Anuj.
Given the current lockdown, how has it been for you, a typical day at work? Because you would usually probably, meet portfolio companies, listen to new pitches. So with the new normal, how is it going this way?
In fact, I would say that a lot of it has not changed for us. Our business was always meeting a lot of people, whether it is on the startup side or whether it is on the investor side. Even earlier, when the lockdown was not there, we used to have a lot of Zoom calls with our startups, both which we are evaluating as well as the companies where we've already invested in. Now with the current, we all were expecting today that the lockdown will increase. So we will have another series of touch points with our portfolio companies just to understand that everything is okay, anything needs to be done for the next 2 to 3 weeks from a short-term perspective. We are just taking it by the day or by the week, I would say. On the investor side as well, in fact, this is the time when we have been able to reach to a lot of investors. Everyone being at home, having some time in hand, and everyone wants to do more constructive things and explore new things. So this is a time when there is a lot of excitement around startups, and investor engagement has grown considerably during these last 2 to 3 weeks.
So this investor engagement is specific to their portfolio companies where they want to have a word with the founder, or is it also about evaluating new companies, and how much of digital uptake have you seen in that?
Investor interaction generally from our side is we continuously onboard a lot of angel investors on our platform to look at startups which are existing or upcoming startups. Today's point of time, we are close to investing in 4 deals a month. That engagement has increased considerably in reaching out to new set of angel investors in different categories, whether it is startup founders, whether it is CXOs, whether it is a lot of HNIs and family offices, because a lot of them are having time on hand. With respect to discussion of investors with their existing portfolio companies, that was a process which we were doing earlier as well. All our review meetings with the investor and startup were always happening on a video call or a telecall. So that process still continues, and we have a calendar set where investors know when to come and review each of their respective portfolios. With respect to our pitch days, I think this is the new normal where we will have a lot of virtual pitch days happening. In fact, it has also opened our eyes to a large extent that earlier we were doing more of offline pitch days. Now we are able to manage a lot of online or virtual pitch days. Just to give you a data point, our last pitch day was attended by more than 330 investors, where 4 startups had presented. This was a couple of weeks back. We have now started keeping global pitch days where our UK, Singapore, Middle East and Hong Kong investors are participating together on the same virtual pitch day. Whereas earlier all of these were happening offline.
Also, is there any change in the conversion rate? Probably, if you had a physical pitch day, were the conversion rates any different?
Definitely, it impacted in the first 7 to 10 days of the lockdown, where people were not clear in terms of mindset, what is the direction that is going to happen. Everyone was averse to taking any kind of decisions when it comes to new investments. But what we have observed that people are, as compared to the first 2 weeks, the banking has increased considerably in the last week, and now with another 3 weeks under lockdown, businesses are going to start in some or the other manner. I have been observing that in the last week or 7 days, every day we are getting fresh commitments for one or the other startups on a daily basis from say 8 to 10 new investors. So the action has started again. It's about the investor also getting more time in engaging with the startup. Obviously, everything is happening on Zoom and virtually, but transactions are happening, money is flowing, money is going to the startup account also. So which is a great thing.
So how is the due diligence being done? If there's some kind of a troubleshooting, say for example in portfolio companies as well, how are you managing that?
So with respect to new deals, generally what happens every time we have a pipeline of 4 to 6 deals which we intend to close. These are deals which we have already decided to invest in, where the due diligence process has already been completed and the selection committee has taken a decision to invest in these startups. So the current startups which are being closed are the ones where the due diligence process etc. had got closed even before 15th of March. So those deals are presented and the transactions are happening with respect to them. As far as prospective deals are concerned, we still are evaluating a lot of portfolio companies. We are very early stage investors. And when it comes to early stage investments, there is a very limited information which you have from a financial due diligence perspective. But you need to understand the business from a long-term perspective, and you need to see whether there are precedents or whether there is right verification happening about the founder and his integrity. These things can still happen virtually. So that is not getting impacted. As far as the existing portfolio is concerned, I would say that we are lucky that close to 80-85% of our portfolio has not been majorly impacted. One of the reasons is we are giving them sufficient capital for 18 to 24 months when we are investing. We've asked the portfolio companies not to focus on extensive growth right now, but just to keep and manage things which they were doing and keep focusing on the core proposition. There are few companies which obviously are facing challenge because they may be impacted directly, being in the hospitality sector, for example, and stuff like that. So if any portfolio company is requiring a bridge for a certain point of time, we are trying to manage that as well.
Do you see that a lot more inside rounds will happen? The existing angels will try to bail out companies or like give them a little push with additional capital probably in the coming 1 year or 18 months time, because I'm guessing that it might be difficult for a follow-on round to happen.
So definitely there will be few companies in the portfolio which will require support from existing investors, and bridge rounds will have to be arranged by the existing investors. It just needs to be seen as to at what terms these bridge rounds are happening. My suggestion to a lot of portfolio companies is don't try and raise a lot of capital unless you really need it at this point of time, because investors will try and negotiate valuation downsides from you at this point of time. So if you are still requiring capital, just take as much as you want, maybe for the 6 to 9 months. Let things get settled down and let the market open up again. As far as new follow-on rounds happening from existing investors, I feel if the opportunity is good from a longer term perspective, the money will still flow in this quarter as well. We are seeing that happening in a lot of current deals in the ecosystem also, where some or the other startup is in the process of closing their open rounds. We've had portfolio companies who were in the process of fundraise follow-on rounds, and they managed to close part of the round during this lockdown as well. As it is, as early stage investors, we invest in startups from a very long-term horizon perspective. It is at least a 3 to 5 years horizon which we are taking. So 2 to 3 months should not impact a good startup which already has capital in its space. And these are ups and downs which you need to face as an entrepreneur. However, there are certain companies who are raising a larger round and they've started taking a bridge round at lower valuations as compared to the larger round. So that is going to happen. The money which a founder will raise will reduce and he'll look at raising a little bit more short-term capital for the next 6 to 9 months rather than looking at an 18 to 24 month horizon. And therefore the valuations may get impacted, but the equity of the founder will also be lower diluted.
Are you kind of identifying weak links in your portfolio? And, if so, what is the strategy going ahead?
It is also becomes our responsibility to educate our investors that this is a 3 to 4 month cycle. We should not judge an entrepreneur and his ability just by an impact of 3 to 4 months. Yes, there is a very deep impact on certain sectors or certain companies, but if we support the ideas which we've already backed, maybe with some win-win situation on all sides, possibly all of us will see this tide. We all need to focus on a longer term, 18 to 24 months. There are certain sectors which are changing the culture of how people are staying at home, of how people are working today, say the content space, the entertainment space, the education space, work from home environment. A lot of things are coming around that. So these companies will definitely mushroom because it is the culture which is being changed at all levels. Today, a lot of us are using so much content from different platforms to consume at home. So these companies are going to grow. So we are keeping an eye on such sectors. There's something like gaming, etc., which is also evolving now. So these are certain sectors which we are keeping an eye to invest at this time. As far as sectors like travel and hospitality, they are definitely one of the largest impacted sectors today's point of time, and larger organizations will try and consolidate. And if there are good technologies which are built or good companies which are built, there is going to be a lot of M&A which will happen in our view in this sector. If you will ask me, we are seeing this as optimistic as possible in current scenario because you have to be innovative in your own business at this point of time.
What kind of, how are you hedging your risks in new investments which you might decide to undertake in, say, the next 2 or 3 months, which you have the companies which you haven't met before the lockdown began, and you think, there are breakout sectors and you want to invest in them? Is there any method?
So unless and until it is a pure play product company where we need to see the product and where we need to get a market feedback on what is the customer feedback on the usage of a product, say an FMCG company or such kind of sectors where hard touch and feel is required, we can still manage to do the due diligence and get the validation about the founder, the opportunity, and the overall long-term perspective about the startup. So those companies we still are going ahead with in terms of our investment strategy. In fact, currently during this lockdown, we've announced closure of 2 deals. Today there was a closure of 1 deal, and there are 2 deals which are going to get closed in the next 2 weeks. So that process will continue. Whereas there would be certain companies which require a hard touch and feel, that probably the founder also understands that he will have to postpone his fundraising process for maybe a month or so till the time he cannot meet us physically and we can see the product, validate the things, get market customer feedback. Those kind of opportunities may get postponed, say for a month or 2. First question is, in fact, the engagement from the investor side has gone considerably high. To give you a sense, in the last 3 weeks, we have done a lot of different vertical market development. We have created a CXO angel network where in the last 10-12 days, we've added almost 35 CXOs from large corporates who are managing, say, the corporate VC arm, likes of Samsung or Accenture or Mondelez or in the healthcare sector. And there is an ongoing engagement which is happening. The second part is we've launched a founder network where we are getting a lot of India as well as global unicorn and unicorn founders in one group and trying to engage with them both from investment perspective, but more importantly to give a lot of insights to portfolio companies or new startups as to how to go about things on an ongoing basis. And there has been tremendous response from these people. See, as an investor, everyone understands currently is active in 22 cities in India and 5 global cities. We have in fact created a pipeline of 12 more cities which we will be launching by 15th of May. There is an ongoing knowledge session and education session, orientation session happening of all these prospective partners. We've informed them that rather than having offline pitches, we should start having virtual pitches in all their cities as well. This will create a new breed of angel investors coming all together at this point of time. And it would be fair to say that the valuations at which we invest at this point of time will be generally better as compared to other times, and therefore there may be a better upside for the investors investing in this time. We have always been educating our investors that this is a long-term asset class, this is an illiquid asset class, and this is a risky asset class. So you need to come in with a horizon of building a portfolio for 3 to 5 years. There are a lot of investors who have been investing with us in close to 90 odd portfolio companies, and today's time we are investing in 4 to 5 deals a month as well. So if everyone follows a portfolio approach, the money will churn. This is going to be the most lucrative asset class in times to come, because this is where you will have a lot of financial impact on your portfolio as well as a lot of non-financial and social impact which you will be able to create at this point of time to the economy.
Are you a part of the group of startups and investors who've been in conversation with the government for some of the relief measures to be given for early stage investors and startups? And also, if so, are there any highlights which you think should make it to the next relief package announcement which is expected in a couple of days' time?
So we are continuously in engagement with the necessary bodies which are trying to take these decisions. Up till now, the reliefs which have been announced by the government have been more from some kind of compliance relief which is applicable across both in terms of taxes, direct and indirect, and other compliances. But government did try to take some measures through SIDBI to give some loans etc. to startups, but the conditions and the eligibility criteria which had come from them were absolutely not acceptable. Not even 2 to 3% of our startup ecosystem will benefit from that, and the conditions were such that if someone matches that criteria, he actually does not require that capital. It's a very catch-22 situation kind of a scenario, that you need to give capital to the people who need it rather than placing criteria for eligibility where such people don't actually need your loans or other benefits. So the government has to come out with more grounded solutions when it comes to relief measures. At this point of time, I would say they have already taken care of compliances. They need to bring some kind of liquidity where startups across the ecosystem can benefit.
Hopefully, we will see some measures trickling in from the government. And on that note, thank you so much for listening to our podcast. Keep an eye out for the next one. Till then, stay safe. Thank you.